Welcome to the Portfolio Manager Career Track of PJFIS 2021. The future starts now. If you want to post about PJFIS 2021, the future starts now, do not forget to use the hashtags PJFIS 2021, hashtag the future starts now, hashtag CFA Society Philippines, whether you're posting on Facebook, Instagram, or LinkedIn. As a reminder, the evaluation form is available in the CFA Society Philippines mobile application. We have evaluation forms for each day of the PJFIS 2021. This is part of your requirement for you to get an e-certificate. And you should attend at least 70% of the whole summit or at least 13 sessions to get the e-certificate. Yesterday, you got an overview of the portfolio manager role and learned key points on client portfolio construction. In our first breakout session this afternoon, Market Trends and Investment Strategies, Ms. April Tan, CFA, will share how portfolios are managed to stay aligned with investment objectives despite market movements. Ms. Tan is the head of research and vice president at Call Financial, the largest online stockbroker in the Philippines. She handles a team of analysts who covers more than 60% of the total market capitalization of the Philippine Stock Exchange. Ms. Tan was also the president of the CFA Society of the Philippines from 2009 to 2016. Under her term as president, the society won several Society Excellence Awards, including the Most Outstanding Society for its size. The society also became the country sponsor for the Global Investment Performance Standards together with the Fund Managers Association of the Philippines and the Trust Officers Association of the Philippines. She also headed CFA Philippines Research Challenge Committee from 2008 to 2019. Under her leadership, the local society won the CFA Institute Research Challenge Global Competition thrice and the CFA Institute Research Challenge Asia Pacific Regional Competition 5 times, giving the Philippine Society the best track record among all CFA's Institute member societies globally. Ms. Tan received her Bachelor of Science in Management Engineering in Ateneo de Manila University. She became a CFA charter holder in 2000. Let's give a virtual round of applause to Ms. April Tan.
Okay. Thank you, DJ, for that introduction, and good afternoon to all the attendees this afternoon.
Thank you, Ms. Tan. It's a great pleasure to have you here, especially someone as esteemed as you.
Okay. Yeah. Thank you. So, can I start my presentation already?
Go ahead.
Okay. So this afternoon, I'll be talking about market trends and investment strategies. So actually, I have a confession to make before I begin. But anyway, let me just share my screen first before I start talking. Anyway, to tell you honestly, when I read the description, I kind of realized, oh, I'm not a fund manager. So I'm not really the best person to talk about this, but let me share with you, what we do, share with our clients, from a retail perspective, retail clients, how should you handle your portfolio? Because to some extent, this is something that I think, fund managers can use, but even if you as a retail investor can use these strategies that I'll be sharing this afternoon, no? Like, sorry, like what do we tell our clients to do? And we will suit it or make it appropriate for different types of market conditions. Okay. So anyway, I just want to share with you that, if you're in the university and you attend an investment class, and then probably your investment 101 class or fundamental analysis 101 class will tell you how to pick the right stock, or how do you pick a stock that you want to buy. So number one and most important, it is that it should have good earnings growth And number two, it should be trading at a good valuation. So I'm sure everybody knows that. Kailangan alam nyo yan or else bagsak kayo. But that is the theory. But in practice, it's really very hard to find this. It's like, finding a unicorn. Kasi bakit naman ganon? Because usually, if the market is very efficient, and I'm sure that's also something that you guys know and is taught in the school, no? Because most of the time, the good news and the bad news are already priced in. Kumbaga, nandyan eh. You don't get a free lunch. If the earnings of a company are good, usually the stock will trade at a very expensive price. And if the earnings of a company are bad, it will trade at a cheap price, no? Um, think about it, why do markets enter a bear market, no? Or bakit nagte-trend siya pababa? Ba't siya binebentahan? Bakit binentahan yung market during the start of the pandemic? Because people are already anticipating that earnings will be negatively affected by the pandemic. And then, when there were signs of a recovery, nagkaroon na ng vaccines, no? Then the market went up. Because again, the market is efficient and, they're pricing in the good news and the earnings recovery. So, that said, I just want to say that, most of the time, these good news and bad news are priced in. And it's just a fancy way of, markets are efficient. That is just, yun lang ibig sabihin nun. Pagka may balita na masama, bababa yung stocks. Pag may balitang maganda, akyat agad siya. And if you're gonna wait for them to come out, you're not gonna make money. You have to actually anticipate these things from happening. Okay? And so why do most investors lose money? Because the opportunities to make money are, happen in these very rare moments. Yun na nga, itong rare moments when the stocks are cheap and earnings are gonna go fast, and these rare moments when earnings are slow and then the stocks that are expensive. So if you think about it, these are the best times to enter the market during, kumbaga, you have to be early during the bull market, and you also have to sell early during the bear market. But why is it that what usually happens is, we are quite late. We buy pagka it's been established that we are already in a bull market, and we also sell late when it's established that it's a bear market, because it takes time to change investor sentiment and for people to actually take action, because we're human beings and we are very hopeful eh. Like pag bumababa yung stock, umaasa pa tayo, nako, baka mag-recover. Tapos pagka yung talagang parang masama na, that's the only time we sell. And then, when we're so hurt and the market is actually starting to recover, ay hindi yan, wala yan, masama pa, marami pang mangyayari, 'di ba? We don't want to accept that the market is recovering. So, we kind of, it takes time for people to change their opinions about certain things. So we end up buying late, Anyway, so how do you invest profitably? Of course, we're going to teach you certain strategies that you should adopt as an investor for you to actually become profitable. I'm just trying to make it simple for you guys so that you can make money. So I guess the first thing to do is to be able to identify different stages of the market. Okay, for you to know when we are at an early bull market, and then once you know that is the situation, you can buy and hold the stock. And then when you know that the bull market is progressing and it's already getting a little bit later in terms of the bull market, you should adopt a more cautious approach in buying the market, or adopt more of a trader mentality where you buy low, sell high, buy low, sell high. And then when it's, it kind of looks like it's going to be a bear market, to avoid buying and to resist the temptation and actually sell your positions and just stay out, no, rather than being very bold and trying to catch a falling knife. And then when conditions are, when it's very bearish and people are very pessimistic, to actually do a slow accumulation of stocks. So anyway, to make it more visual and easier for you to understand, my boss Edward Lee always uses this chart to kind of show you what's going on. So here you do have the early bull market stage where usually there's no interest. People don't really care about the market and stocks are super cheap. Parang inabandon na, wala nang pakialam yung mga tao. And then of course, there's rumors of recovery, and then earnings really start to recover, and then there's increasing confidence. So here you see we're entering the late bull market because parang naging uso na lahat ng tao, they wanna buy stocks already, everybody's confident. Then you hear yung mga instant wealth, parang yung cryptocurrencies na yan uso na yan, aakyat, tas may euphoria. Okay, in this condition, usually this is accompanied by cheap financing. Okay, and then of course you have the bear market. Okay, the early part, of course, you go down really fast. Okay, there's the panic selling, people lose wealth, and then it rallies sometimes a little bit. There's a short-lived confidence before like ang tagal, hindi pala siya nag-recover talaga. Then that's the time when people lose hope and they just don't wanna buy anymore. Yung mga umaasa pa dito ay magbenta dito, usually nagbebenta, no? Oh, anyway. So yan. When it's the early bull market, the strategy is to buy and hold. So if you bought some stocks here, just hold on to it, you don't have to look at your portfolio, just keep it there. And then when it goes to the middle to late bull market stage, you change your hat from a buy and hold hat to a trading hat, to be more, I guess, more cautious or be ready to sell when the time comes. And then, when it is a bear market, you sell or you exit. Usually the problem here when you exit, assuming that you were lucky and you exited somewhere here, the problem is, what happens is, pag nandito pa lang, bumibili na. Yan. Kasi naka-exit ka So parang, ay, mura na. So you buy here. What happens is, it goes down further and you lose money. So, yan, tapos. But, resist the temptation to come back in and just exit the market and stay out. And then finally here, the mid to late bear market, I guess the recognition that yes, prices can still go down, but the thing is, more or less people have lost hope. People have accepted that we are having a bear market and parang nawala na ng gana. So when you come in during this mid to late bull market, you only buy slowly because most likely you will be able to buy cheaper going forward. The problem is we don't know where the low is. But having a mentality that this is gonna take time, but if it recovers, I'm gonna make a lot of money. So once you're cognizant of that, you probably will buy more slowly and you will buy using long-term money, and so that will allow you to catch the wave once the market starts to recover again and you were able to buy at a very good price. So anyway, I'll just give some examples so that you can actually relate to it more. Okay, so I'll just give you an example of a market that is in the early bull market phase. And I'm happy to tell you that the Philippines is actually in an early bull market phase. Okay, and the reason why I think the Philippine market is in an early bull market phase is because our GDP is recovering. Our GDP growth is recovering after a very poor 2020. And if you look at the earnings of our companies, they are recovering. I mean, they are not yet back to pre-pandemic level, but you can see that they are off the lows. They are better than what they were last year. And I think most importantly, you can see that our COVID-19 cases are already under control in the country. They're going down, and it looks like it, even if they can go up, most likely COVID will be endemic, and the government will do its best to make sure that life goes on, even though COVID-19 is still there, and we do have some medications that are becoming available. Then vaccination is also an option. And then, of course, the valuation of stocks are still very cheap. I'm not saying all, but most stocks are still very cheap, trading at a depressed valuation, as if they will become bankrupt. No. And finally, I think a lot of people are still very cautious. They don't want to believe that we're already entering into a bull market, or um, things are gonna get better. I mean, if you talk to the common person out there, parang hindi sila maniniwala eh. Parang, ha, talaga? Sustainable ba yan? Yung ganun. Eh, hindi. Masama ulit eh, di ba? Eh, what if? Puro mga ganon, di ba? So this high level of cautiousness is actually very good for the stock market. When that happens, it just means that this bull market has more room to run. And when this is the scenario, we are recommending a buy and hold strategy. So if you buy stocks today, you can hold on to them for a bit of time, because now is actually one of the best times to buy stocks. Okay, so now let's move on to the late bull market stage. So what types of asset, or what is an example of an asset class or a market that's in a late bull market phase? And in my opinion, the cryptocurrencies are in the late bull market phase. So first of all, I just like to share the reasons why I think cryptocurrencies are going up. This is because they are beneficiaries of the rising inflation and the loose global monetary policy. Di ba nga mga maririnig mo, the fund managers or some people will talk about why they don't have confidence in cash. Because they say the central banks keep on printing cash anyway, to the point that they will become useless, etc. So yun na nga, that's why cryptocurrencies are becoming quite popular, no? And so for me, the reason why I think it's in the late bull market is because the value of cryptocurrencies is based purely on supply and demand. If I ask you, how do you compute the value of a cryptocurrency? Nobody can tell you anything. They will most likely tell you, eh kasi may demand eh, kaya akyat yan. Unlike a stock, di ba? You can compute the value of a stock by looking at its earnings, or may asset siya, may lupa siya, di ba? Or most likely they will earn this much. So if the future earnings will be this much, then it's worth certain value. But you don't have that with cryptocurrency. It's based purely on demand for that cryptocurrency, no? And of course, the high level of optimism. Maraming taong nag-invest at bumibili ng cryptocurrency because they're making money. And that's not something that you really like. If an asset class becomes super popular, you try to, be more cautious, or, you think twice about it. So anyway, if you still want to buy cryptocurrencies, regardless, because it's still going up, my advice lang is to trade it rather than to buy and hold it. Don't just buy it and just forget about it. This is something that you monitor on a consistent basis, because you're already late in the game, and it is very volatile, and there is a chance that eventually this asset class would go down, and yun na nga, malulugi kayo, no? So buy on support, sell at resistance. Yan, ganyang strategy ang sinasuggest. Like for example, for this case, if it goes down here, you buy it here, and then, you know, when it rallies, then you sell again, no? Yung mga ganong strategy, rather than to buy it and hold it. Okay. And I just want to share also that there are some Philippine stocks that are also in the late stage bull market, no? For example, there are two popular stocks among retail investors right now that have been going up quite a bit. AC Energy and Converge. In our opinion, these stocks are in the late bull market stage also. So our strategy, if you want to invest in these stocks, is to view it as a trade more than a long-term investment. And why do we say that? For example, AC Energy, yes, it is in an ESG business because it's in renewable energy and it's growing its portfolio quite a bit. But if you look at the valuation, this stock is trading at 40 times PE, no? Which means it's very expensive because other power companies are trading below 20 times PE. So it's more than double the valuation of other power companies. Yes, it is a renewable energy company, but I don't think the premium is warranted. Even in other countries, renewable energy companies don't trade as high, no? And then Converge is another stock that we think is already in the late bull market stage because it is very expensive in terms of mga multiples. For example, for telcos, we use EV over EBITDA as a multiple. It's similar to the PE ratio. Pero this one is trading at around 15 times. And the average for other telcos is around 7-8 times. So double din siya. That's why we feel like it's too expensive at this point. Parang everybody's just too excited about it, and it's just gone up a lot. So we have a bit more cautious view on these two companies. We feel like it's in the late bull market stage. So mas trading ang mindset namin with these two stocks. Okay, and yun na nga, another thing is yung mga high-flying stocks, I think a lot of investors get attracted to the stock market because of tips and rumors, yung mga high-flying stocks, we call these, mga speculative issues. We view them similar to stocks in the late bull market stage. Kasi there's ambiguity, so it just goes up because of demand. Strong demand from investors. The problem is with these stocks, usually when the excitement dies or when the details become available on why people are really excited about them, they go down, no? So yan, may chismis tapos nagkatotoo nga yung chismis, bumababa siya. And why is this? It's because, analysts like me are now able to compute what will a company be worth given all of this. And usually, it's probably less than the peak. That's why the value goes down. And then, yun na nga, the hard work begins. It usually takes time for a company to become profitable. Hindi naman yung sabihin, nagbukas ka ng negosyo, kikita agad eh. So, yan, you have to be able, or the business has to be able to turn a profit and actually grow those profits and become really successful to justify prices recovering and going up, exceeding even the previous high. Okay, so I just have some examples here so that you can relate to it much more. Okay, one of the stocks in the past that acted this way, similar to this trend, was Bloomberry Resorts, yung Soler, operator of Soler Resorts in the Bay Area. Okay, so before, the stock just went up because, na medyo recent lang naman yung mga casino sa Philippines eh. Okay? So, yun na nga, it went up all the way up. Then, Bloomberry had an IPO at 750. And then it rallied. So, in 2012, it had the IPO, but prior to that, meron pang mga kung ano nangyari, mga chismis. But anyway, finally, the casino opened its doors in March 16 of 2013. Okay, so what happened? Usually, a common investor or yung mga bago sa stock market would think, oh, di ba dapat umakyat yan kasi nag-open na yung casino. Usually, that's not what happens, Parang late bull market. Nung nangyari yun, what happened? Yung mga earnings nag-disappoint kasi, when you open a operations, usually may ano yan um, there's this ramp up phase pa. Okay, so the profits disappoint. And China was cracking down on corruption and gaming, yun nga and Soler was affected. They had large bad debts, maraming gamblers hindi nagbabayad. Then they had competition from City of Dreams. So the stock was sold down all the way from 16 to mga 3 pesos. Okay. So ayan, after 3 years, finally the company turns around. Okay. So the earnings have been recovering and it's now here. Of course, it's affected by the pandemic. But that said though, at least, that's only part of the normal cycle. Kumbaga, they've proven that they can survive. Okay. Then another stock that is super popular among retail investors is Dito. That's the third telco. I just want to tell you that in case you're still holding on to that stock, medyo matatagalan pa. We believe that Dito is still here. It's not yet here. Because remember, the stock went up when it won the third telco bid. And then they got the license to operate. No? That was in 2018. No? And then in 2020, the third telco was injected into the listed company. And it passed the first technical audit in February, and it began operating in March. Unfortunately, since then, the stock continues to go down. And this is because the company admitted that they will be losing money for the next 2 years. And 2023, it is projecting to be just cash flow break even, and profitability will not be there until 2025. So of course, if you own this stock, syempre parang, sige matagal pa, tsaka ko na lang ulit bilhin, di ba? So it's still here. So if a stock is in this stage, what do you do, di ba? We talked about this. You avoid it first and wait for it to show signs of a turnaround, then you come back in. Okay. And an example of a market that is in an early bear market, aside from Dito, is the Hong Kong stock market. Okay, and this is because of regulatory changes in China. Remember, the Chinese government is trying to pursue common prosperity. So it's doing a lot of changes in regulations to encourage, greater equality among the people in China. The valuations of Chinese stocks that are listed in Hong Kong are very cheap. And this is tempting a lot of people to buy in. But in our opinion, since we are in the early phases of the bear market, best strategy is to avoid it first and wait until everything quiets down and, there's no more interest before going back in and trying to bargain hunt. Okay. So what is a stock potentially that could be in the late bear market phase? A while ago, we're kind of talking about, this late bear market phase is the time when you can start accumulating slowly. In the Philippines, we believe, COVID-19 sensitive stocks that are smaller cap issues could be good to accumulate at this point. And an example would be Megawide. Similar to other Philippine stocks, it will benefit from the recovery of the Philippines GDP growth. And its earnings are already recovering, and it will benefit from the COVID-19 cases being under control. And the reason why this is not going up, unlike other COVID-19 sensitive issues is because smaller cap issues are the last priority of fund managers. Usually, fund managers will buy the blue chip issues like the Ayalas or the SMs, and even the Gokong Way issues like yung mga Robinsons, no? And then they will buy these smaller ones last, like Mega Wide. So in that respect, may ano pa yan, eventually, they will move to these smaller cap issues. And Mega Wide, by the way, operates the Mactan Airport. And if the economy reopens, that one will also start operating and benefit. So the strategy for a stock like Megawide is a slow accumulation. Okay, so to end my presentation, I would like to share with you this quote from John Templeton. Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. Okay. So with that, I hope I was able to share with you some strategies you can use in different stages of the market so that you can invest profitably. So with that, thank you very much.
Thank you, April. And for the
Okay.
Q&A portion, may we please follow Mr. Reginald Reyes, CFA, Fixed Income Fund Manager of Security Bank Corporation, Trust and Asset Management Group.
Hi, good afternoon, everyone. Thank you, Ms. April, for that very insightful presentation regarding investment strategies and market trends. So if you have any questions, you can type in your questions in the chat box. So to start, Ms. April, I just have a question. Since we're slowly opening our economy, what sectors do you think are going to benefit the most with the economy slowly opening and our cases are slowing down?
So right now we're seeing a rotation into the cyclical issues or those issues that were battered because of the pandemic. So for example, we're already seeing the banks and property companies leading the way in terms of going up. But of course, I mean, if you look at the Philippines, almost all the stocks naman are cyclical in nature, diba? Even the consumer issues, the retailers, they would also benefit. So it's more of that rather than the defensive issues that went up because of the pandemic. Sila naman most likely, especially if you think about it, the more expensive ones, no, like yun na nga ASIN, Converge, they might take a back seat first. So if you were holding on to those issues, maybe it's time for you to think of a switch to the more cyclical issues because of the recovery from the pandemic.
Okay, thank you. So again, everyone, if you have any questions, just type in the chat box so we can ask it to Miss April. Well, for the meantime, Miss April, and also I think everyone knows for the U.S. Fed, they already announced that they'll be starting their tapering talks. So and also locally, we also have our elections next year. So what are the impacts of these two factors in the market?
Okay, sorry. The first one is the Fed.
Yeah,
the
Fed tapering. Yeah.
Okay. So I think yung Fed tapering, just to put things into context for our attendees today, the reason why people are super worried about the tapering or the US scaling back on their bond buyback program is because in 2013, the global market, not only the Philippines, but all markets around the world went down sharply because then Fed Chairman Ben Bernanke said, "Oh, I'm gonna scale back on my bond buyback programs," because if the Fed stops buying back bonds or reduces the bond buyback program, it would indirectly result to higher interest rates. And I'm sure you are all aware that higher interest rates are not good for stocks because people would have better alternatives in terms of where to place their cash versus stocks, no? So because of that, what happened was, stocks went down across the board around the world. And aside from that, of course, the peso weakened significantly. That was May of 2013. And you can look at the chart of the Philippines, you'll see that. So people are worried about that happening again. But, that said, this time around, we feel that it's not going to impact us as much. Why? First of all, if you look at how Jerome Powell is conveying the message on the taper, he's doing a dovish taper. Parang hindi yung biglaan na sinabi niya eh. Parang he's talking about it he's already talking about it. That, oh, well, yeah, we're going to do a taper. But then he adds, well, after we do a taper, doesn't mean we're going to raise interest rates yet. We want inflation to climb up to 2% and sustain the 2% level for a very long time. So I think that's kind of helping the market na hindi sila, yung mga tao, they're not as worried that rates will go up. Parang, and so, and secondly, if you think about it, in 2013, I think we started the bull market during that time in 2009. So the market's been going up for 1, 2, 3, 9, 10, 11, 12, parang 4.5 years. So after 4.5 years, kumbaga, people are really very optimistic in 2013. In fact, if you look at the chart of the PSEI from 2009 up to today, you will notice that since that taper tantrum in 2013 up to 2019, the Philippine Stock Exchange actually was just moving sideways. And most stocks, didn't make money, investors. So iba eh. Nung 09 to 2013, people were making a lot of money. So syempre nagkaroon ng ganyang surprise, bad news, binentahan. So, but this time around, iba eh because lahat ng tao kausapin mo, yung parang may skepticism, ayaw nilang maniwala na akyat yung market. No, people are so pessimistic. Like everybody I talk to is so pessimistic about the stock market. And parang yung taper tantrum, yeah, everybody's expecting that already. It didn't come as a surprise. So for me, the impact this time around is not going to be as significant. No.
Okay, we have a question from Fernalyn Lumangyao. What are the differences between a portfolio, a fund manager, and a wealth manager? And what are their respective areas of focus?
Okay, I think the portfolio manager is the one who handles the funds. Medyo nasa backroom siya eh. Parang the wealth manager is the one talking to the clients, no? And recommending, or sila yung humaharap sa kliyente. But then once the wealth manager, or once you as a client already deposits the fund, it's now the portfolio manager who will take care with, allocating those funds to buy the different stocks, different bonds, no? What else is the question?
What are their areas of focus?
Yeah.
And the wealth manager also. Yeah.
Oo, mas institutional investor. Yun na nga, one is handling the funds and the other one is handling the client. So yung wealth manager mas client facing. And then the portfolio manager is more, handling where to put the money,
And then we have a question from Joshua Tatlonghari. Do you recommend selling defensive stocks that went up during the pandemic, such as consumer staples?
Well, okay. That one's kind of tough because there are some consumer staples that are still trading at attractive valuations. But if you have limited money and you want to catch a faster growing stock, then yes, maybe reallocating your money would be best. So switching away from the defensive issues, more to those cyclical issues that we talked about, like property stocks, banking stocks, and even some holding companies that are predominantly um, focused on banks, properties, and consumer names that are more um, discretionary.
Okay, so, I think we have time for two more questions. This one is from Christine Ronatay. Can you share some tips or strategies to remove false signals or market noise?
False signals or market noise. Actually, mahirap yun eh. Kasi, in some ways, it takes experience. Just to tell you, I'm actually a fundamentalist by training. But honestly, being exposed to a lot of technicians, I kind of respect and use technical sometimes, because sometimes, they also have messaging eh. They tell you whether you should focus on fundamentals too much or not. Like I remember, when was this? When the market was testing the 7,000 level. At that point, I think if you do consensus, if you do a survey, consensus would probably tell you it's not going to go above 7,000. So sell whatever stocks you have. But then, since we had a little bit of a technical background and our benefit of trading foreign markets, we could see that in other markets that stocks were already going up, because there was yun na nga, the talk of that dovish taper. Okay, and secondly, in other countries in ASEAN, countries were have already dealt with the Delta variant, and they were waving the white flag and saying, we can't keep on locking up. We have to open our economies. And this was being viewed favorably by the developed market fund managers. Na, okay, Thailand is opening up, Indonesia is opening up. So we're seeing mga fund flows coming in. So you have to use all those elements. And also, what are the foreign fund managers thinking? I mean, if you look at the net foreign selling in the Philippines, they're all out. So kung out na sila, ano pang ibebenta nila? May mabebenta pa ba sila? Wala na silang mabenta eh. So nakakatakot, pero and also in Manila, at that point in time, we were already hitting maybe 50% vaccination. 50% of the population vaccinated. So kami, okay, we'll just make a bet that this one will, the market will break out. So I think we were one of the very few houses at that point in time who made a bet that, we think this market's going to go up. Like, how bad can things be? Yes, if I were wrong, probably I'd just be delayed. No, but what if I'm right? Diba? I'll be one of the few people who are still holding stocks, and naman, when the market is like the Philippines is very liquid, like it is, when a stock goes up, it just goes up 5% and you have no way of catching it. Diba? So you have to be positioned ahead before the price goes up. So it's kind of difficult to to remove the noise. You have to have some level of experience. And I think it helps also if you use a little bit of technicals. Kaya nga, di ba, if you look at some images, you kind of know at what stage of the market you are, and if you look visually, if you look at the chart, you know that we're in the late stage get entering into early stages of a bull market. So in that respect, you have a better chance of being right than being wrong.
And then just to close, final question from LJ Kabugos. What are your tips, or how can we make sure that we are making the wisest decision when investing in the stock market? So yeah.
Yeah. Well, yun na nga, I think now is a good time to actually start investing. And you don't have to make it complicated. If you don't know what stocks to buy, maybe you could just buy a fund, um, and just hold on to it, because I think despite the volatility of the market, just remember what phase we are, and go to the chart, no? Yung parang bell curve. We're still here on the left side. So most likely when you're there, you don't go back to a bear market, you go naman to a bull market. It might be delayed, but that is most likely the next phase that we will enter. So therefore, I think you will make a lot of money. So wag masyadong malikot. Pag nagkamali, sige, hintayin mo lang. Just make sure that the money you put in the market right now is money that you will not be needing soon, so that you will have that holding power.
Okay, thank you, Miss April. I hope
Okay.
we answered some of your questions. Apologies if I wasn't able to pick your question.
So thank you, April, and thank you, Reginald. Those were very insightful. Actually, one of the things that I appreciate, and I think our audience appreciates, especially on this session today, is the practicality of this session as compared to yesterday that was very theoretical. So thank you, April, and thank you, Reginald, for your insights on how things are actually run in the portfolio management space, and being able to provide insights to today. So, as a token of our appreciation, we provide you the certificate of recognition. So, the CFA Society Philippines presents the certificate of recognition to Ms. April Tan, CFA, for her valuable contribution as speaker on the topic of market trends and investment strategies at the Philippine Junior Finance and Investment Summit 2021. The future starts now. Given this 11th day of November 2021, signed by Dr. Robert Ramos, CFA, Kaya, and CIPM, President of the CFA Society of the Philippines. And also thank you, Mr. Reginald Reyes. We also recognize you for your valuable contribution as moderator for this topic of market trends and investment strategies, also signed by Dr. Rob Ramos for the PJFIS 2021 The Future Starts Now. All right. So God bless and keep safe, everyone. Let's have a quick photo op. Our sincerest appreciation for your time and effort for being here today. So let's take a picture. Everybody, please smile, and our back end will count down which pages are already okay. Everyone, smile.
1, 2, 3. Thank you.
Okay, all right. So we're going to have our 10-minute break. If you have not downloaded and installed the CFA Society Philippines mobile application, please do so now. For your questions, please see the prepared list of frequently asked questions available also in the app. If you want to post about PJFIS 2021, the future starts now, don't forget to use the hashtags hashtag PJFIS 2021, hashtag the future starts now, and hashtag CFA Society Philippines, whether you're posting on all the social media networks, Facebook, Instagram, LinkedIn. As a reminder, the evaluation form is available in the CFA Society Philippines mobile app. We have evaluations forms for each day of the PJFIS 2021. This is part of your requirement for you to get an e-certificate, and you should attend at least 70% of the whole summit or at least 13 sessions to get your e-certificate. All right. So let's have our break and see you in 10 minutes.
Why choose the CFA?
How has being a charter holder helped my career?
The confidence that it's given me in my own analytical ability.
Being a charter holder has broadened my perspective.
My understanding of the industry is much better than before.
You gain a broad understanding of a lot of different subjects.
And it's made me more confident in the work I do.
Instant credibility from my peers.
I can go to a different country. I will meet people who have the same qualification, who understand what I've done to achieve it.
It's a global program, so you can speak to someone who's a charter holder from India or from South Africa, and they understand you.
It feels good to know that it's quite valuable for employers in the industry.
My belief that I can achieve anything.
So I think being a CFA charter holder helps me to communicate with my clients in a language they understand.
The CFA gave me a lot of information that I had not learned during my economics degree.
The amount of knowledge which you get is so diverse.
Something I didn't know when I started the program was how important the ethics portion was. I realize now that it really sets the standard in the industry in terms of practices.
I can speak the same language with hundreds of thousands of investment professionals.
A deep knowledge, understanding of the financial market.
It is wanting to know how all the pieces fit together.
Because it really does open a lot of doors within the financial industry.
I learned to be patient, focused, dedicated.
So when you get those letters after your name, it's a pretty good feeling.
Having a CFA on my name card gave me a huge advantage, especially as a woman, because when I walk into the room, he immediately knows you mean business.
It's not an easy process,
but nothing's impossible.
It was a lot of sacrifice, but it's worth it.
I felt that I did a very, very big achievement.
And it made me feel proud.
I'm very, very, very proud.
I'm very proud of the achievement.
I'm very proud to be a CFA charter holder.
Let's build a better world for investing.
Let's lead in improving the quality and standards of the financial profession.
Keep you abreast of financial innovations here and abroad.
Be known for our integrity and professional excellence.
Let's always put investors' needs above our own.
Push for financial literacy.
Provide service to the investors through the selection of the best managed funds of the year.
Let's build trust in our industry.
Advocate on behalf of industry issues.
Convince trust and asset management companies to adopt the Asset Managers Code and the Global Investment Performance Standards.
Let's put ethics at the heart of everything we do.
Talk about ethical decision making.
Encourage ethical behavior and be really passionate about it.
Create an environment where investors' interests can flow.
Markets function at their best and economies grow.
for the ultimate benefit of the Philippine society.
I am Chris Arceo.
Mark Yu,
Erwin Ocampo Avante, Rob Ramos.
Sandra Aurelio Gonzalez.
Mark Ilao.
Kate Burgos, and I am CFA Charter Holder.
We measured
up. Join us.
Let's measure up.
Welcome back, everyone. We're now down to the last session of the day. So let's talk about how portfolio managers are assessed. What are the indicators of a successful portfolio manager? In our next session, Mr. Mark Ilao, CFA, will share how a portfolio manager's performance is measured and reviewed. Mr. Ilao is currently the head of funds distribution at Call Financial Group Incorporated, where he is overseeing the first online fund distribution platform in the Philippines known as Call FundSource. Prior to this, he was an investment analyst under BDO Trust and Investments Group, covering equity, fixed income, and macroeconomic research and strategy. He graduated magna cum laude with a Bachelor of Science degree in Management Engineering from Ateneo de Manila University. He has earned the right to use both the Chartered Financial Analyst and the Certificate in Investment Performance Measurement designations. Let's give a virtual round of applause to Mr. Mark Ilao, CFA.
Thank you very much for the kind introduction, DJ.
Hello, Mark. Kamusta?
Doing great, doing great. No.
Excited na for this session?
Yeah, I understand this is the last session. So hopefully the students are still having a lot of energy, to listen.
Yeah, they seem very interested. So the floor is yours.
All right, thank you. Thank you very much. So as mentioned by DJ, I'll be talking about the fundamentals of performance measurement. So on surface, you guys might think that this is something that might not be that interesting, but I hope to change your mind as we end the session. So basically, I'll go through the whys, the whats, and the hows of performance measurement. And I'd like to start my presentation by saying that performance measurement is something that we all encounter. We may not be aware of it, totally napag-iisipan natin mabuti, but everywhere, anywhere we look, it's something that is something that we'll always encounter. Okay, so if you go to the next slide, I'd like to give some examples of performance measurements that we can encounter in real life. And going to investments later, I'd like to get that context first, that this is a way for us to actually objectively look at things. So for one, you guys as students, you know this very well, that you are measured by what we call the QPI, GWA, or your grades at school. And it's quite objective in a sense that we have the highest possible score available, and at the same time, you can compare it against other students, other peers that you have, right? And even on the grading system, you have a way, a structured way to actually capture the performance of a student, whether it's A level, meaning was able to get anywhere between 93 to 100, or an A minus student, a B plus student, things of that nature. So this is one concrete example of performance measurement that you encounter in real life. Another example is the next slide. So when we try to compare gadgets, for instance, we're trying to assess which one would be the better gadget for us. Let's say a cell phone in this case. You're going to take a look at different features or elements of that gadget. Take a look at the display, the hardware, the battery, the camera, the operating systems, and there are numbers that would encapsulate, so to speak, the performance of such gadgets. And that will allow you to ultimately choose between the two, which one is the best choice for you. Another example in the next slide is when we're taking a look at sports personalities. So in this case, for instance, basketball. So you have LeBron James or Michael Jordan. And these athletes, we measure them by certain performance production. So could be points per game, could be rebounds per game, could be assists per game, or it could even be the number of championships that they were able to bring in. So the point is, with this kind of performance measurement, you'll be able to objectively compare when we ask questions like, which one is the better player between the two? Or trying to see which one is the more prolific scorer between the two. Questions like that can be answered by performance measurement. And if you go to the next slide, that's actually a common point for conversation when it comes to investments or portfolio management. So with performance measurement, you can objectively assess which one is better performing than the other, or how you can compare two investments or two portfolios in an apples to apples manner. So like I said, if you go to the next slide, everywhere you go, you will encounter performance measurement. So it's something that is deeply fundamental in the way we live. So now, let me go to the whys, the whats, and the hows of performance measurement. So first, why is it important that we talk about performance measurement, or we understand performance measurement as it is? So number one, as I have already mentioned, by doing performance measurement, we are able to properly, objectively measure results. So there's no debate that itong student na to, I think he's good at math just because I think so, right? Or I think this gadget is going to perform better versus the other just because I feel so. So no, with performance measurement, you have certain metrics in order to properly measure the results, right? Secondly, we'll be able to assess if there are any performance issues. So looking at investments, for example, it's not just simply the returns that you're going to assess, but actually the way by which those returns were able to be produced by a certain fund manager, for example. The third one is, I think, very important, and that is to establish performance trend over time. And this is very important because this will allow people to actually distinguish between skill and luck. Why is that? Sometimes a common pitfall of human beings is that we tend to take a look at performance measures only over a short period of time. So with that, you won't be able to actually assess whether such performance is born out of luck or really out of skill. So in order for you to answer that question, what you need to do is to create a trend over time so that you see the consistency, you see whether such kind of production is really something that can be attributed to the skill of that professional. So case in point, if you go back to my example in basketball. So if you see a player being able to produce 30 points in one game, but the next 5 games, the production is just 3 points. And so you can say that maybe the 30 points is just a blip, an aberration. But if we take a look at the performance over time, this player is likely to be just average. So that's one of the important elements when we're talking about performance measurement. The other reasons why we do performance measurement is that we want to evaluate not just the returns that we're getting, but also the kind of risk taken by an investment, for instance. And this will allow us to ultimately say, I'm comfortable in that kind of risk, or I think this investment is really efficient in terms of producing returns for every risk that he or she is taking as a professional. And all of these 4 reasons that I mentioned will actually contribute to the last one, which I think is the most important reason why we should do performance measurement. And that is to enable evidence-based decision making. So it actually eliminates a lot of subjective emotions or feelings that may usually impede yung investment journey mo as a person. I think that's really common when you think of investing. A lot of people, they tend to go for the ones that are trending or yung mga na-hype lang, narinig na sa mga kaibigan nila. So I think that's where performance measurement will come in. Ultimately, it will allow you to have an evidence-based decision-making process to help guide you on what should be the right investments for yourself. So having said the whys, what is performance measurement really? So if you go to this slide, it tries to establish the 2 building blocks when we're talking about performance measurement. So performance measurement is something that will deal with past and observable data, okay, in order for us to make investment decisions. So it has to be something that can be established. It's not something that you will just draw up in your mind. So it's something that should be there. And that's why it's observable and it can be validated by other people. So there are 2 building blocks when it comes to performance measurement. Number 1 is the output, and secondly, the time element. So the first building block would be the output, and we're talking about returns and risks here. So we're pertaining in particular to investing. So a lot of people, when they try to do performance analysis or performance measurement, they just stop with returns. So I think that's a common mistake. But you will realize later on that one of the currencies actually in investing, in order for you to provide returns, you must take risk. Okay, so it has to be part of the performance measure. It's not just the returns that we're trying to take a look at, but even the risks taken by an investment. And then going to the second building block, it's not just enough that we know how to measure returns and risk. We also have to know how to properly take into account the time element. That way, we will be able to allow for comparables. So meaning, if you're going to compare investment A versus investment B, there has to be a common point. It's not just, oh, alam natin, returns nito is 10%, the other is 5%. But what period of time are we talking about? Is it over a 1-year period, 2-year period, 3-year period? So time element is an important building block when it comes to performance measurement. Okay, so having said that, how do we go about performance measurement? So now that we know what is performance measurement all about, let's go through the different approach how to do it. So there are a lot of ways to actually do this, and I won't spend the rest of my time in this session talking about all the equations. I'll just let you guys do it later on, encounter it in your profession, or you as an investor, you'll see it. What I'll try to do this afternoon is to offer some forms of framework so that at least you have the fundamentals of how you can properly do performance measurement when it comes to your investment. So the first one is what we call absolute performance measurement. So this is all about capturing the returns of an investment over a specific period of time. So this is basically marrying the two building blocks that I talked about in the previous slide. So let's say we're analyzing an investment over a 5-year period. So what we'll try to do is take a look at the data over the last 5 years and try to make sense of it. So at least we already have the inputs. So now what we just need to do is to capture the return. So how do you do it? So you can do it in terms of periodical returns. So you'll do it on an annual basis. What is the compounded return of this investment? Or you can do it point A to point B return. No, as long as it's clear to you what is the time period you're looking at and what is the supposed output. Meaning, if you get the point A to point B return, what does it mean? So in layman's term, you have to explain it na, okay, point A to point B, this means this is the cumulative return of that investment. So as a specific example, if you go to the next slide, let's say if we're taking a look at the Philippine Stock Exchange Index here in the country. So a year ago, same time last year, the index was trading at 6,645. So today, when I made this slide, that ended at 7,396. So if you're capturing the point A to point B return, that would be an 11.3% return over a 1-year period. So the over a 1-year period element is very important so that, again, you'll be able to compare it against other investments, other peers, comparable peers. And the time element essentially allows you to make it personal also because it can match the time at which you entered the investment or essentially the horizon that you're looking at. So that's absolute performance measurement for you. So it's a standalone measure where you look at the growth or performance of an investment over a specific point in time. The second way to do performance measurement is what we call attribution review. So what do you do when you're doing attribution? So you're essentially dissecting the performance of an investment in order to understand how it was able to achieve the returns that you got from number one, maybe. So how do you do it? In the case of a portfolio, for example, if we go to the next slide, let's say we are looking at a specific fund. And within a fund, it will be comprised of different securities or investment. And you get an idea of how big each security or investment is relative to the fund. So what you try to do is you analyze, okay, the top holding of this fund is Wilcon, Converge, and you relate it to the market performance. How did the Converge or Wilcon stocks perform over a period of time? And how did this fund perform? by marrying those two aspects, you'll be able to explain the reasons why this fund was able to perform the way it had. So for example, if the fund is up by 30% for this year, and you know for a fact that Wilcon, I'm just giving a theoretical example, went up by 50% and it's a top holding. So you can attribute that the performance of the fund, the 30% performance of the fund, was primarily driven by its top holding Wilcon. So knowing this kind of approach will allow you to actually identify funds that you may be able to essentially appeal to. So meaning if you're looking at this kind of investments or stocks or this kind of return, by taking a look at the attribution level review, you'll be able to appreciate more what the fund is doing. You understand that, okay, this fund is actually investing in stocks that are more on the growth side, or this fund is actually investing in stocks that are larger caps, so meaning mas malaki na sila, mas established na. So that is the importance of the attribution review. So you put more flavor or color to the top line performance that you got from the absolute performance measure. So that's another way to do performance measurement. The third way is what we call the risk-adjusted performance. So going back to the what of the performance measurement, it's not enough that we get the returns of an investment, but we also try to relate the kind of risk that it took in order to get that return. So what you're trying to do here is we compare the level of return versus the level of risk involved in that investment. So for example, go to the next slide. Let's say we're taking a look at two funds. Okay. Fund A gave you a return of 10%. Fund B gave you a return of 7%. So if we take a look at returns only, and let's assume that we're talking about the same period of time, 1 year or 3 years for that matter. So on surface, if you take a look at the return only, all of us will agree it's Fund B that is actually the better fund, right? So returns alone, no debate. It's Fund A rather that is better, giving you 10% over 7% of Fund B. If we include the risk measure, however, that each fund took, so let's say Fund A, in terms of the risk measure, that's 15%. Fund B, the risk measure is 10%. If we take that into account, we'll have the risk-adjusted return. That should be risk-adjusted return, the last element. You'll see that Fund B is actually better than Fund A in that respect. So meaning to say, Fund B is more efficient in terms of converting each unit of risk into each unit of return. So objectively speaking, if we're just talking about risk-adjusted performance, Fund B is actually much better than Fund A. Now, in real life, the question is, would you rather invest in Fund A or Fund B? The answer to that question ultimately will depend on your risk appetite. So meaning, if you're more aggressive in terms of your risk appetite, then knowing that Fund A has a better absolute return, even though it has higher risk, that can still be more rewarding for you. Because you know for a fact that the absolute return is higher. So if you're willing to take on more risk, then that's fine. You can invest in Fund A. However, if risk is very important for you, you're the type of person who won't be able to sleep at night peacefully if you see your investment going up by 20% and then going down by 30% in just a day or two, then Fund B may be something that will be more suitable for you. So how do you measure risk? There are many ways to do it actually. And that was what I was referring to when I said I won't try to enumerate anymore all the types of risk and equations that you will encounter. So one popular measure of risk that usually we use in the industry is what we call the standard deviation. So basically, it will bear the volatility of the fund. So the higher the standard deviation, the more volatile the performance of the fund is. So it's not as consistent, so to speak. Okay. So essentially, again, what you're trying to do here is you're relating the returns of the fund versus the kind of volatility that it has. So again, ultimately, how you make use of this risk-adjusted performance will go back to the kind of risk appetite that you have. Okay. And then finally, the last way that you can do performance measurement is what we call relative performance. So over the last few slides, what we have been doing is trying to establish the returns on its own. And then we started to compare it with other funds, other investments by introducing the risk adjusted return. So what you do with relative performance is essentially you're going to take a look at different metrics and relate it with other funds or the industry average. And aside from this, part of the relative performance measure is you not only take into account the comparables, but even the benchmark of an investment. So let's take a look at relative performance versus peers first. So if you go to the next slide, what we're trying to do here is we're comparing the fund versus the performance of the industry at large. So versus its peers. So when you are doing this, one common pitfall that people run into is that they just simply get all the comparables without really assessing objectively if these investments are really comparables to begin with. So what I mean to say is that, for example, if you're going to compare stocks versus crypto, is that really an apples to apples comparison? If you ask me, no, because they give you a different kind of exposure. So that's not a proper relative performance, no, so to speak. You can still do it for whatever utility you may have. But in terms of comparing one investment to another, the best way to do it is comparing it against its closest peer. So, for example, if we're talking about stock investments, you try to take a look at funds, portfolios that are invested in stocks, and compare it against portfolios that are also invested in stocks. By the same token, if you have portfolios or funds that are invested in less risky assets like fixed income, you try to compare them against the same type of funds or portfolio. So that way, it's going to be more apples to apples. So what you do here is simply you can do it in terms of just the industry average. So you take a look at one fund, compare it against the industry average, making sure that the industry components that you use are really comparables. And then you can take a look at the different metrics already. So whether it's the return, the risk measure, or the risk adjusted performance. So here you can see that Fund A is actually performing better than the industry. So with that kind of relative performance, you can say that not only is the Fund A giving me the kind of returns that I want personally, it's giving me 10%, I'm comfortable with 15%, but aside from that, I take comfort in the fact that it's actually performing better than the industry. So this is something that maybe will really be a staple in my portfolio. So that's one way of doing the relative performance. The other way to do it is what we call the relative performance against the benchmark. So if you go to the next slide, what is a benchmark? Basically, a benchmark is a theoretical index where you can compare a fund or a portfolio against. So usually, this benchmark would have an exposure that is similar to the investment, to the portfolio, or to the fund that you are looking at. What is an example of a benchmark? One of the best examples there is what we call the PSEI, or the Philippine Stock Exchange Index. So it's a benchmark used for many stock investments, be it direct or fund investments, those that are invested in the stock market. So what you can do here is maybe you already saw the fund performing better against the industry peers. You take a look at the benchmark now. So is it also performing at par, below, or even higher than the benchmark? So if we go back to Fund A, we can see here that actually it's lagging the index. So the index is up by 12%, while Fund A is up by just 10%. So even the risk measure, they're the same, but on a risk-adjusted performance, the benchmark is still even better. So what does it mean? It means that if there is a way for you to actually invest in the benchmark, and in reality, you will find out later on that there are actually funds that just track the benchmark. By knowing this information, you can objectively say that maybe it's better for me to invest in the benchmark rather than with this fund, even though the fund is actually performing better than its industry peers. So that's the importance of having this kind of relative performance measure. It allows you to actually have a bigger picture, an overall picture of how to assess the performance of an investment. So not only will you look at the investment on a standalone basis, you'll also try to compare it against the peers, but you go above that. You even try to compare it against its benchmark. Okay, so with those pieces of information, you'll be able to come up with a very well-informed investment decision, no, choosing the right investment for yourself. Okay, so I guess just to wrap up my session this afternoon, here are some key takeaways that you can take note. So number one, when it comes to performance measurement, actually, there's no hard and fast rule to do it. As you may have noticed in the different approaches, okay, sometimes you can stop with number one. If that is your purpose only, just to measure the time period returns of an investment. But sometimes you need all four because you're now trying to put your actual money into an investment. So it will depend on the use that you're trying to address, and that will tell you what kind of approach you should do for your performance measurement. The most important thing is that you have a framework. Okay, so you may have different equations later on, different types of measures. So measures like, I will name a few: Sharpe ratio, trainer ratio, okay, things like that. So there are a lot of performance measures that you'll encounter later on. So you'll have to just know and understand when to use them properly. Again, having the proper framework is very important. And the four approaches that I mentioned this afternoon, those will be your go-tos. So that will be your fundamental ways to do performance measurement. And aside from that, what I'd like to leave you with is the idea that performance measurement is actually just one component of a broader evaluation process. Why do we say that? You have to go back to the what of the performance measurement. So I mentioned earlier, performance measurement is just dealing with past and observable data. What about the future? So that's something that performance measurement will come in, but you'll have to do it separately. So that will be forecasting already. At the same time, you have to include qualitative analysis already. So for example, if you're trying to assess the investment management company and see whether the way the fund will perform will be sustainable, you don't only look at the past performance. You also look at rather at the investment process of the investment management firm. So that is the broader evaluation process that you'll have to go through. But performance measurement is an important element of it. Okay. So the final takeaway is essentially this session. So knowing the whys, the whats, and the hows of performance measurement will set you in the right direction. So you will have to go back to these building blocks, to these elements, before you even go through the more complicated one. So again, the importance of performance measurement essentially is it will enable decision-based, uh, uh, rather quantitative based decision making, no, evidence based decision making, and it will allow us to actually compare investments in a manner where we can see the entire picture versus, it could be versus the industry, versus the benchmark, and taking into account the risk. So that's essentially the fundamentals of performance measurement. I'm pretty sure, guys, you'll encounter a lot more details, more topics dealing with investment performance, especially as you put your money in investments later on. So hopefully you were able to learn new things about performance measurement this afternoon, and I'll be more than happy to address any questions that you may have.
Thank you, Mark, and thank you for your insights with regards to performance measurement. To moderate the Q&A part of this session, may we call on my colleague, Mr. Jerome Go, CIPM Assistant Vice President and Head of Independent Wealth Consultant Channel in ATRAM. The floor is yours, Mr. Jerome Go.
Thanks, DJ. Mark, first off, thank you for that very wonderful talk. Very concise, but very relevant as well. So thank you, Mark. I think I'm speaking in behalf of all the attendees.
Thank you.
Siguro while waiting for the questions from the audience to come in, I would like to start it off first. Siguro I just want to pick your brains as well. So Mark, fundamental questions first. I guess there are 20 plus equity funds that are invested locally, right? Pero why is it, Mark, na medyo wide yung dispersion of returns given the same lang naman yung securities, and how do you connect that to using the right tools na performance measurement tools?
Yeah, thank you for the question, Jerome, and nice to see you again. So actually, the way to analyze yung difference in the performance of equity funds is that we should go back to the kind of exposure that these funds are actually providing. One of the reasons why there could be the dispersion or variations in terms of their performance, the exposure that each fund would have. Because if you take a look at the equity fund space, so for those of you who may not be familiar with equity funds, these are professionally managed investments that are invested in the stock market. So in this case, we're talking about local stocks. Now, within the local stocks or local equity space, you have different types of exposure. One exposure could be exposure in what we call growth and smaller companies. So these are companies that are outside of the Philippine Stock Exchange Index or the top 30. Okay, so that's one. The second would be what I just mentioned, companies that are precisely the members of the Philippine Stock Exchange Index. That could be another exposure of an equity fund. The third possible exposure is more on the dividend side. Some funds can be focusing on dividend paying stocks, specifically the new ones that we're seeing being introduced in the market. These are what we call the real estate investment trust. So these are dividend paying companies. And then another possible exposure that we can encounter in the equity fund space would be what we call thematic or sectoral funds. Some equity funds can focus on, let's say, consumer specific companies. Some equity funds can focus on infra related equities. So because of these different exposures, sometimes you'll have different variations in their performance. So the way to address that is, while you can get their performance as an entire group, and that will be your industry benchmark, the other way to do that is to actually separate these funds into their proper categories. So meaning you will take a look at the funds that have exposure in growth and small caps only. You will take a look at the funds with dividend exposure only. You will take a look at the funds that are driven by larger caps or the PSEI members. So that's how you can properly do the performance measurement there. Okay. In other countries, actually, it could even be more complicated because of the different kinds of exposure that they have. But in the Philippine market, I gave everybody just a snapshot of the type of exposures that we can see here in the local equity space.
Yeah. So I guess, Mark, what you're saying, just to use an analogy, parang buying an apple, di ba? There are different types of Apple. So when you compare funds to funds, you have to make sure that you're comparing the right funds based on the investment mandates or paano sila in-invest. For example, very difficult not to compare a fund that focuses on small caps, small companies versus that sinasabi mo nga sa index. Especially if you're starting to invest outside of the Philippines. So that's one thing. So I guess I'll take a question from the floor. Meron akong magandang nakita dito. I guess this one, a very common question. Even me, when I was starting in this industry, do the active management investment firms, let go or fire portfolio managers that underperform compared to the benchmark for a year? I think that's the qualifying word there, for a year. Underperform the index for a year. And how common is it for a portfolio manager to underperform or outperform? So, yan. Very good question.
Very interesting question, actually, Jerome. Well, for one, if we go back to the content of my session this afternoon, I think yung a year's time is actually a very short period. For anybody, be it a retail investor or even a professional investor. So I would say 1 year as a performance time period is something that can be unfair. Kasi for example, I'll give you a scenario. The COVID pandemic that happened last year. So no matter how good you are, most likely you would have gotten hit by this in many ways. So if you're just looking at 1 year performance, that may not be able to reveal yung sinasabi ko nga kanina, the distinction between luck and skill. So in order for you to identify skill, you have to have that kind of performance measure over a period of time. Having said that, going to the fact that if a portfolio manager underperformed the benchmark or other maybe comparables nila within the industry, will they be fired? So actually, that's another question. Here in the industry, I think it may be something na from time to time you see it happening. Okay, but probably here in the Philippines, not that often yet. I think it's because what you have to understand is yung portfolio management, it's just one component of the business of an investment management firm. And sometimes the portfolio managers actually provide other services just beyond the kind of performance that they produce. So you have to take those into account in terms of this kind of decision making, whether to fire somebody or not. So maybe in some cases, yeah, it could be the case, but based on my experience, it's not really prevalent. You see people underperforming, therefore next year or 2 years from now, you don't have a job anymore. And the reason why I also say that is because statistically, and I'm talking about the US market, for example, if you go to that market, they have thousands of funds and a lot of funds investing in the stock market. But studies have shown that over 80% of those funds actually underperform the benchmark. So if you have such kind of stat and this reality that you're saying will hold true, then a lot of portfolio managers will have no jobs, but that is not the case. So hindi naman siya that prevalent. So what will only happen is that the repercussion of underperformance may not necessarily cost their job, but certainly it may reflect in the assets that they're managing. Because you, as an investor, if you're not getting the kind of returns that you want, what do you think will you do? You will pull out your investment and find another place to park it in. So that's how the fund manager will feel it. If it will not cost his job, at least the level or the size of the business will feel that.
Yeah. Tama, Mark. I completely agree that number one, a year's time to evaluate the performance of a fund manager is a bit short, diba? That's why plug ko lang when we award the CFA funds of the year, tama Mark, now we use at least 3 and 5 years. No? So that's a really good benchmark to use when you evaluate even the funds. No? Not just the portfolio manager, but the funds themselves. No? So if you haven't guys seen no, yung mga binibigyan na award ng CFA Society of the Philippines, no? Every year we do that. No? And Mark, I think, is one of the lead no? In that. So alam ko na 5 and 3 years yung ginagamit. So also that could be a good benchmark for us to use.
Yep.
Another question, Mark. Yeah. In your analogy, what do you think is the closest thing to an apple when comparing the performance of, my God, crypto? A lot of ano talaga, no? Interest for cryptocurrencies. How do you? I mean, I'll break this down, Mark. Number one, how do you attribute the performance of a crypto? Number two, if you want to compare it in terms of risk, kasi alam naman natin, di ba, the volatility of cryptocurrencies in general is higher. Ano yung closest thing to its risk profile?
Yeah. I think this is really a topic of interest lately for many people. And we can take a look at cryptocurrencies as, emerging assets, if you want to call it that way. And usually, when you're trying to compare the performance of an emerging asset versus traditional assets, you will really come across this kind of difficulty. So how do you properly benchmark this or what? So I think I will look at it as a form of alternative investment. But at the same time, I acknowledge that the kind of behavior that these cryptocurrencies have is still different compared to the alternative investments that we're used to the past hundreds of years. So what alternative investments are we talking about? So you're talking about commodities, no, like gold, or even art. No, those are alternative investments. But the thing with cryptocurrencies kasi, it's also traded, and not just traded in a specific set of hour every trading day. It's actually practically 24/7. So there's a technology behind it. So to be honest, if you ask me, no, there's really no apples to apples comparison right now that we can think of, objectively speaking, against cryptocurrencies. Maybe the best way to do it is within that space. No, what are the securities that you are looking at? Ano yung mga sort of assets na andyan? And then yun yung mga i-compare mo. So I think you can compare it apples to apples against equities, against other traditional investments. So it's going to be within those space already. Kasi like I said, it's something that all of us are also trying to learn at this point. What is clear is that these cryptocurrencies have a different kind of risk and reward profile. Okay, I think that's that one we can all agree. So having said that, it's naturally difficult to find something that would match the kind of risk and reward profile that it offers. No, so don't mistake it na just because it's also high risk, high return, it's already comparable to a stock investment. By no means. Medyo malayo yung risk profile nila kasi yun nga, if you talk about the daily volatility, the yearly volatility, it's a totally different market environment.
Yeah. So Mark, we're down to the last question. It's a very fruitful, actually, na conversation, but of course we are constrained by time. So I guess let's go to the last. No? Our portfolio managers' compensation, because obviously they are preparing for a career as well. No? Are the compensation packages of PMs tied with their risk-adjusted performances or in the number of years you serve in a company? So parang I guess yung question is more on paano generally kino-compensate yung isang portfolio manager in a company.
Yeah, let me answer the question by saying that I think each company would have their own way of compensating their employees. not least of which would be the portfolio managers. So I understand some companies would have as one of the KPIs of these portfolio managers the performance of the fund. No? Yung whether they're outperforming the benchmark, ganyan. Certainly, it could be one of their KPIs and therefore tied yung overall salary growth and bonuses that they can receive sa element na yan. But obviously, yung second part ng question will also come into the picture. The number of years or tenure that you have. Kasi in investments, that's something that you also try to put a premium onto. Diba? So if you know somebody who's been in the industry for 30 years versus somebody who's been in the industry for just 5 years, no, objectively speaking, you can say that the guy who has 30 years of experience has seen a lot of market cycles already, right? And therefore, that person can also command a certain premium compared to a younger one. So I guess it will be a combination of the two. If you have both, then that's definitely a Goldilocks for you. So I'm pretty sure you'll be well compensated anywhere you go.
Yeah, so I guess that's all the time that we have, Mark. Sayang, I guess if we have more time, madami pa tayong ma-entertain na questions. No? But anyway, a very fruitful discussion right from the presentation all the way to the Q&A. So DJ, I'll give back the floor to you.
Thank you, Jerome, and thank you, Mark, and thank you, Jerome, as well. Before we provide the certificate of recognition, medyo nakakatakot for, aspiring portfolio managers to hear that statistic na, what do you call that? A lot of the portfolio managers tend to underperform the benchmark. So given that performance measurement, statistic, what's the case for active management, and why should our participants still aspire to become portfolio managers? And I think also to Jerome, like how important really is managing performance measurement with the client, and how do you skirt away from underperformance?
Yeah, those are very great questions, actually, DJ. Well, for one, let me premise the answer by saying this. In any field, for that matter, it's not just investments, you can actually say that only 10% or 1% will actually be the ones that would exhibit skill. No? So anywhere you go, be it in sports, be it in academics, right? So you can see that there's a form of ranking everywhere. So does that mean that as a portfolio manager, you should abandon active management? I think the answer to that is very clear. No. Because as a portfolio manager, your job is not just necessarily to outperform the benchmark, but actually, again, one of the building blocks is to make sure that you're also trying to manage the portfolio in a way that is going to conform to the risk appetite of your investors. And at the same time, doing active management is actually a very important component of the capital markets. So you have to have those people in order to reach the efficient level that we're saying, the market efficiency that we should see in different capital markets. And I think active management will be here to stay because there are people, we have to admit, that are really gifted and this is their vocation, this is their calling. So relating it to the personal experiences of the students this afternoon, I guess it will go back to yourself. You have to ask yourself, what is your passion? Is this something that I really want to do? And is this something that I think I can be good at? If the answer to those questions is yes, then definitely you try to pursue a career as a portfolio manager, do active management, and try to outperform the benchmark as best as you can. But if you can't, don't worry, you're not alone. Just try to do it year after year.
Thank you, Mark. As Mark said, basically, you need a lot of emotional maturity and discipline when you want to become a portfolio manager. And if you feel that you know that you could do it, then that can make you one of the 10% of the good portfolio managers, diba? So thank you, Mark, for your insights, and thank you for Jerome. As our token of appreciation, we'd like to present the e-certificates for Mr. Ilao and Mr. Go. So the CFA Society Philippines presents the certificate of recognition to Mr. Mark Ilao, CFA, for his valuable contribution as a speaker on the topic of fundamentals of performance measurement at the Philippine Junior Finance and Investment Summit 2021. The future starts now. Given this 11th of November 2021, signed by Dr. Robert Ramos, CFA Kaya, CIPM, President of the CFA Society Philippines. And we'd also like to recognize Mr. Jerome Go, CIPM. And CIPM, by the way, is one of the other recognitions that you could have in the CFA program. It's a sister recognition also managed by the CFA for performance measurement. So you don't need to be a portfolio manager if you want to measure performance of portfolio managers. That's another track that you could do. For his valuable contribution as moderator on the topic of fundamentals of performance measurement, signed by Dr. Rob Ramos, the president of CFA Society Philippines. Okay, thank you, Mark, and thank you, Jerome, for all your insights, and thank you for sharing your time. Let's have a quick photo op, please. And again, thank you for sharing your knowledge and expertise, and thank you for moderating the session, Jerome. Let's have our picture. Everyone, please turn on your cameras, and let's smile in 3, 2, 1. Okay, our back, please inform if we're done with the pictures.
Very good, thank you.
All right, okay. So wow, we've covered so much from the past 2 days already, and it's only day 2. And we still have 2 more days to go as we complete the PJFIS 2021. The future starts now. The winner of the game, 2 Truths and a Myth, held during our break is Joyce Ann Castillo and Chelsea Derio. The correct answer is A. So please send us a message through our PJFIS Facebook page for instructions on how to redeem your call-funded certificate prize. So thank you, Mark and Call, for the prize. Guys, do not forget to complete the evaluation form for today. Remember that the completed evaluation form is also part of your requirement to get your PJFIS 2021 certificate. We will see you again tomorrow for day 3 of PJFIS. The future starts now. Before you go, let's take this opportunity to thank our sponsors and partners. Our platinum sponsor is MSCI Philippines. Our gold sponsor is AP Securities Incorporated and Call Financial Group Incorporated. Our silver sponsor is our own Atram Trust Corporation, DBP Daiwa Capital Markets Philippines, and Papa Securities Corporation. Our media partners, Business World and Business Mirror, and our event partners, Bureau of the Treasury, the Philippine Stock Exchange, and Securities and Exchange Commission. Thank you, everyone, and I hope that you enjoyed this day's session.
Thank you, everyone.
Thank you, guys.